There's Ag Growth. It's a supplier of equipment for the farm sector, and you can see the stock down around 12% today. Bloomberg's Stephanie Hughes has more. Stephanie, thanks for joining us.
Yeah, it's been a tough day for Ag Growth International there. Those shares fell as much as 15% at their lowest point today, and that was the biggest intraday drop since the onset of the pandemic in March 2020. And this was because the company, which is it manufactures grain equipment there, it cut its 2024 adjusted EBITDA guidance by about 7%, down to $260 million. 2025 also had a bit of a cautious outlook to it, which Raymond James analyst Steve Hansen said was the latest string of disappointing news and results reflecting a more difficult macroeconomic backdrop and poorly managed conditions there. National Bank Financial also weighed in, saying that this guidance cut really was not a good look, especially since it was the third cut in 2024. The analyst Maxim Saichev there also noted that the commercial segment recovery that management previously communicated would be once again pushed ahead this time into 2025, mostly due to engineering and procurement delays there. The company is still hopeful that there will be some kind of recovery in 2025, but as Saichev noted, that same optimism is probably not going to be shared by investors, at least over the short term, and we're sort of seeing that reflected in the share price today there, Andy.
That's interesting. Yeah, it's quite the sell-off as well, down 21% in the past year. You're also looking at the fertilizer sector. I've seen names in that group getting some upgrades.
That's right. So it's been a good day for the companies that fertilize agricultural crops. So Nutrien shares were up by about 5% today, and that brought the share price up to its highest point since last June. And it's rising in tandem with other agricultural chemical names after Piper Sandler gave a double upgrade to the entire space there, moving from an underweight rating to an overweight. The analyst team also pointed to what they called decidedly constructive data for the agricultural segment with into 2025, looking at adjusted estimates for corn and soybean crops. So they said that the magnitude in change in crops was unusually large and appeared unexpected by the markets as at every level, basically. So other agricultural chemical names that are also moving higher today include CF Industries and LSB Industries. They enjoyed some upgrades from Piper Sandler, but focusing on Nutrien because that's quite a jump there, Andy.
And we've got about a minute and a half, Stephanie. You and Jeff Morgan wrote a story just about how Trudeau's abrupt decision to go and Trump's threats to use economic force to swallow Canada have people, equity strategists in Toronto and in Canada, rewriting their playbooks?
Yeah, so last week was a tough performance for the TSX, but despite that, that was the first full week of trading in the year. Despite that, portfolio managers haven't reversed their bullish take on the TSX moving forward, and they actually have a few ways to position around it. One investment analyst I spoke to said that despite the short-term volatility, he's actually focused on the longer-term game plan there, just given that there's a lot more demand for copper, lumber, oil, you name it. Interestingly enough, I also spoke with Christine Poole. She's a regular on this channel. She is actually focusing on services names on the TSX because unlike companies who provide goods, services names are less likely to be impacted by tariffs. So a few examples of that would be WSP Global and CGI Inc., a technology provider. Those are based in Quebec, but they have operations in the U.S. there. My colleague Jeff Morgan spoke with another analyst at Purpose Investment who recommended holding excess cash and looking more internationally. So despite the political turmoil, looks like there's some opportunities out there.
Thank you very much, Stephanie. Stephanie Hughes of Bloomberg.